Borrowing by banks climbed last year, on average by as much as two-thirds in aggregate, as the central bank's liquidity mop-up to tame consumer prices coincided with higher demand for credit and trailing deposit growth. HDFC Bank's mid-July merger with mortgage lending pioneer HDFC also caused borrowings to swell for mainstream lenders under the central bank's watch. Reserve Bank of India (RBI) data showed average bank borrowings on a fortnightly basis were at Rs 6.39 lakh crore from January 13th to December 15th, 2023. That's 67% higher than average fortnightly borrowing of Rs 3.81 lakh crore over the comparable period in 2022. Figures listed under the borrowings section for scheduled commercial banks in the fortnightly RBI data largely represent short-term funding routes, such as interbank repo operations and the use of tri-party repos, analysts said. Issuances of instruments such as additional Tier 1 bonds and infrastructure bonds are included in bank borrowing data, but certificates of deposits are not. For a large part of 2023, liquidity was at a deficit. Banks had no other option but to borrow. Secondly, with deposit rates rising, to protect their NIMs, net interest margins, banks had to look at various options to optimize their borrowing costs, said Soumyajit Neogi, Director, India Ratings and Research. Latest Reserve Bank of India data also showed that as on December 15th, bank credit growth was at 20.2% year-on-year, while deposit growth was at 14.0%. Credit growth has persistently outstripped deposit growth since April 2022. Credit growth has been robust for 2 years back-to-back. Banks have had to look at various options to maintain their AM, asset liability management, Neogi said. In 2023, fortnightly bank borrowing touched an all-time high of Rs 8.46 lakh crore, as on September 8th, almost Rs 3 lakh crore higher than the 2022 high of Rs 5.49 trillion, which was as on October 21st. This unexpected surge prompts the question, what caused this massive increase in bank borrowings? Scene script. Several economic factors played a significant role in this increase. Let's break it down and delve into the crux of these economic elements. First off, inflation. Inflation is the rate at which the general level of prices for goods and services is rising. Now, in a high inflation scenario, people tend to borrow more. Why, you ask? Well, when prices are rising rapidly, it makes sense to buy goods now, rather than later when their prices would have increased even further. And to make these purchases, people often turn to bank loans. Next, we have interest rates. Interest rates have a direct impact on the cost of borrowing. When interest rates are low, the cost of borrowing decreases. This makes borrowing more attractive for businesses and individuals alike. And that's exactly what happened in 2023. Low interest rates made loans cheaper, leading to a surge in bank borrowings. Finally, let's talk about GDP growth. The gross domestic product, or GDP, is a measure of a country's economic activity. When there's a high GDP growth rate, it indicates a booming economy. And in booming economies, businesses expand, people spend more, and as a result, bank borrowings increase. In 2023, India witnessed a significant GDP growth, which could have spurred this borrowing trend. These factors, inflation, interest rates, and GDP growth, create an environment conducive to increased borrowing. They set the stage, if you will, for the surge in bank borrowings we saw in 2023. While these economic factors provide a broad context, there are also specific factors that contributed to this surge. Government policies had a significant impact on the increase in bank borrowings. Let's delve into some of the key policies implemented in 2023 that may have encouraged this surge in borrowing. Firstly, the government launched several initiatives to stimulate business expansion. These policies provided easier access to credit for businesses, both big and small, encouraging them to take on more debt to fuel their growth. Another major policy change was the focus on infrastructure development. The government unveiled an ambitious infrastructure plan in 2023, making large amounts of capital available for projects in areas such as transportation, energy, and housing. This policy led to an increase in borrowings as companies sought to capitalize on these opportunities. Additionally, the government eased borrowing restrictions. Banks were encouraged to lend more freely, with less stringent requirements for collateral. This policy change made it easier for individuals and businesses to borrow, driving up the demand for bank loans. But it wasn't just about making borrowing easier. The government also took steps to make it more attractive. They implemented tax incentives for businesses that took on debt for expansion or capital investment. This strategy not only increased the attractiveness of borrowing, but also further spurred economic growth. Then there were the policies aimed at the agricultural sector. Recognizing the need to modernize and expand, the government provided low-interest loans to farmers. This move led to an increase in borrowings in rural areas, contributing to the overall surge. And let's not forget the policies that targeted the housing sector. The government introduced several schemes to make housing more affordable, including subsidies for home loans. These policies increased the demand for mortgages, adding to the rise in bank borrowings. Therefore, government policies played a crucial role in this scenario, but there's another key player in this situation: the banking sector itself. The banking sector's own strategies and initiatives also fueled this increase in borrowings. Let's dive into some of these strategies and how they had a hand in this significant upswing. Firstly, the banks lowered their interest rates. In a country like India, where the majority of the population is middle class, even a slight decrease in interest rates can make loans more appealing. This strategy made borrowing cheaper, thus encouraging both individuals and businesses to take out loans for various purposes, whether it was buying a new home, expanding a business, or funding education. Secondly, attractive loan packages were offered. Banks introduced a range of loan products tailored to different customer needs. From car loans to home loans, education loans to small business loans, there was a product for almost every need. These well-packaged loans, coupled with the lowered interest rates, made borrowing seem not only feasible, but also financially smart. Finally, let's consider the easing of loan approval processes. Traditionally, getting a loan approved in India was a long, arduous process. However, banks, in their bid to increase borrowings, streamlined their processes. They reduced paperwork, cut down on approval times, and even offered online application and approval processes. This made borrowing not just affordable and attractive, but also quick and hassle-free. These strategies by the banking sector were not standalone actions. They were part of a larger ecosystem that included favorable economic conditions and government policies. However, they played a crucial role in making loans more accessible to the Indian populace. The banking sector's initiatives, coupled with favorable economic conditions and government policies, largely explain the 67% increase in bank borrowings. Let's recap the main points we discussed today. We've explored the dramatic surge in bank borrowings in India in 2023, a staggering increase of 67%. This phenomenon was no accident, but rather the result of a perfect storm of economic factors. The landscape was shaped by inflationary pressures, changes in interest rates, and shifts in the global economic climate. Moving on, we delved into the role of government policies. We saw how regulatory changes and fiscal measures played a pivotal role in creating an environment conducive to increased borrowing. We also discussed the proactive strategies of the banking sector itself. The bank's aggressive lending practices, coupled with innovative financial products and services, significantly contributed to this uptick. In essence, we've seen how this increase in bank borrowings was a complex interplay of various elements, from macroeconomic factors to government policies and banking strategies. It's clear that a combination of factors led to this surge, providing a fascinating case study of economic dynamics in action.